Welcome back. Still watching the newsroom now. The stock in focus right now is Deepak Fertilizers. After a blockbuster set of numbers, the stock did attract a lot of attention of the investor community, both at the HNI level, at the funds level, and of course, outstanding commentary coming in after the numbers. So we thought of getting you the management of Deepak Fertilizer on the road ahead and what all is happening in the company. Mr. Sailesh Mehta, Chairman and Managing Director of Deepak Fertilizer, is joining us now. Good afternoon, sir. Thank you so much for joining us. Now, you have really raised the bar higher after your fourth quarter numbers have been very strong, overall yearly performance as well. And the expectations are high. Talk to us about how do you see growth panning out from this kind of performance levels, and where do you see it sustain going forward?
Sure. Thanks. So it was indeed a very good year, and the top line jumped by 24%. We crossed 5,800 crores. Net profit actually jumped by 357%. It was a good year from that perspective, and roughly around 80% of these profits have emerged from the chemical business. Though we are Deepak Fertilizers, but as you know, the chemical business is a major part of our overall business. And we could also pair off our net debt, reduce it by around 840 crores on. So now going forward, basically I would look at it from two perspectives. One is a tactical one and the other is the strategic one. So from a strategic perspective, we had put in a lot of efforts last couple of years and last year in particular in terms of very strong systems and processes and cost optimization. So those are going to further give the positive traction in the coming years also. The second is that the investments that we had made in the last 3-4 years in terms of our fertilizer capacities, our asset capacities, all of them are now kicking in. And last year saw a certain kind of, I would say, addition emerging out of those investments. And in the years ahead, we will see more of that panning out. The third is from a strategic perspective, we do see the shift of industries from China to India having a very positive effect on our customers. And in turn, particularly in nitric acid business, we are finding that there is a positive current that is emerging. But at the strategic level, the most important aspect that we are seeing is that over the last now more than a decade, all are the three businesses that we are into, that is industrial chemicals, mining chemicals, and fertilizers. All three we are finding they are beautifully aligned with the India growth story. So as India grows, its requirement for power emerging out of coal or the need for cement and limestone or infrastructure, all of it is going to require our mining chemicals. So it's beautifully aligned with the India growth story. When it comes to the pharmaceutical sector, and as India continues to play a significant role in the global markets, our industrial chemicals, IPA and the others, will be well aligned with that kind of a growth story. And so also as the mid-income group grows in India, the need for not just food security, but fertilizers relating to horticulture, fruits and vegetables, that is beautifully aligned. So what we are finding at a strategic level, this alignment is bringing in a very, very strong tailwind, a positive kind of a tailwind, which is going to help us sustain and improve upon what has happened. Having said that, at a tactical level, if one were to look at, last year, with the push that we made, we still had a sufferance in the initial, I think, first quarter because of COVID. And we are seeing that we still have around 15 to 20% headroom in our capacities still with us. So that is going to certainly give us a certain additional strength in the current year to continue this good work. The other aspect is that despite somewhere we see a little bit of a raw material price hike emerging all over, we are finding that with the finished goods demand also being very strong, we are in a position to pass through some good chunk of the cost increases. Our product differentiation that we had worked hard at is something that is going to allow us also that kind of an elbow room to continue looking at insulating our margins. But above all, in the fertilizer business where the global phosphoric acid DAP price is shot up, and that could have impacted our fertilizer business, the government on a fast track has come up with a fairly substantial increase in the fixed subsidies. And that has come in, to placate the cost increases on the P side. So the farmers will get fertilizers at reasonable prices, so no demand destruction. And of course, the rains are also predicted to be normal. So all in all, I think it's looking
Mr. Mehta, let's break down those things. Mr. Mehta, allow me to interrupt you over there for a moment. Let's break down those things which you have spoken about into smaller parts for easier absorption. If you could tell us, you have stated after your good numbers in the presentation that you're actually expanding capacities across your three segments. Talk to us about how visibility is, how much expansion are you undertaking, and moreover, how will all of that be financed?
Sure. So what we did was some 3 to 4 years back, we looked at where do we go from here in the next 5 years, 7 years, 10 years. And so one aspect we saw was that wherever we have built strength over the last 40 years, it made eminent sense to further invest and grow into those because there is a strong 40 years experience and a great market. So like I said, in the last 3 to 4 years, we have tripled our fertilizer capacities. We have increased and added one more asset complex. And that's been the game plan. Now going forward, what we saw was that all the three businesses that we have, that is industrial chemicals, mining chemicals, and fertilizers, the key raw material has been ammonia. And looking at the growing needs, we were looking at ending up importing roughly around 500,000 tons in a year. And so we thought it is most logical to do backward integration and go into ammonia. So what we are looking at is now to consider an ammonia facility next door to our current complex that is there. So with that, all the logistics costs that we would have otherwise had to bear, lugging the ammonia from the Middle East to JNPT to Taloja, where our complex is, all of that will be saved. So we will be looking at almost $70 to $80 per ton saving in the logistics costs. And today we are also seeing that LNG prices, global LNG prices on a longer term basis are indeed soft and very attractive. And that LNG is the key raw material for our ammonia project. So that is something that we are looking at, and there not only we have acquired the required land, we've got the environment clearances, EPC, the Toyo engineers are already at site. 95% of the equipment has already arrived. And so we are looking at now the next 24 months, 26 months for actual construction. By March end, we had invested roughly around 1,500 crores. And in the next 2 years, we would be looking at around 1,350 crores in each year in order to complete the project. So that is one, expansion that we are looking forward to.
Right. Mr. Mehta, there's a big transformation happening at your company from a commodity company. It is becoming a specialty company. A lot of Capex is being put in by, as you just said. But we understand that there are also a lot of technological transformations happening. Ammonia is actually, some of the scientists are saying, is turning out, can actually have a potential to be a, fuel alternative as well. Hence the visibility of demand on ammonia could be quite high. You are expanding your facilities there. Talk to us about how big opportunities lie for you going forward, and how do you aim to benefit from it? Because you briefly did speak about import substitution opportunity for your company. So how does the management strategically wants to exploit that big opportunity that lies ahead because of tech transformation, because of import substitution plays and your capacity is coming online?
Sure. So as I was sharing that as far as the ammonia project goes, it's a huge import substitution Atmanirbhar project, and we could be looking at somewhere close to 25,000 crores in a 10-year period. That could be something that would be a forex saving. But on the technology-based transformation, the transformation that we are having from a commodity-oriented kind of makeup to a specialty, that is something very interesting, and that's going to be changing the very face of what we do and how we do things. So let me give an example that in the fertilizer business, unlike the traditional method of focusing on the product, whether it's urea, NPK, SSP, DAP, instead of the product focus kind of an approach that typically is there in the industry, we are moving towards more of holistic solution oriented approach, where we are looking at a nutrient basket for sugarcane, a nutrient basket for cotton, a nutrient basket for fruits and vegetables. So we are bringing about a complete shift from product to solutions, and the shift from customer to consumer. So instead of focusing on the channel, we are going to be focusing on the farmers. And last year, this work has been going on since the last 3 years. And last year we saw a very strong validation of this whole strategy into what played out. And because of our specialty fertilizers, specialty NPK, we found that, this aspect of it is finding very strong positive traction. We have had almost 2.5 million farmers now as our customers, validating this value proposition that we have brought. So that is where we are bringing in strong technology to look at more of performance fertilizers, more of aspects which will impact not just yield, but even the quality of the produce. And that's going to be something that will bring out a sea change. Similarly, in our industrial chemicals as well as in our mining chemicals, we are looking at moving from product to solutions. And we are looking at each segment and customizing the needs of that segment and bringing in the world's best technologies, IP, to look at helping the final consumer improve their yield, their productivity, whether it is a mine or whether it is any other end product. So those promise to be a very exciting, I would say, journey for us going forward.
Mr. Mehta, so as a part of that, are you also open to tie-ups with overseas companies in the process of bringing high-end technology into the company and your processes? Have you been approached by overseas companies for such partnerships in your businesses?
So I must share that while we have certainly been pursued by some of the global giants, because they on one side see India as a great country to be in, but with a little concern in terms of the complexities that they need to deal with, and which is where they are looking at partnering, strategic alliances of various kinds. And I'm happy to share that they are validating the strategies that we have put in place. And that's the reason why they are also looking at, some kind of an association. Beyond that, these are all under NDAs. So, I am refrained from sharing more. But yes, it gives a certain kind of a joy that a global player who has been in this industry also appreciates the kind of work that we are doing and sees value in it.
Right. All right, Mr. Mehta, we wish you all the luck on that, transaction, which you may not wanting to speak about at this stage. We will look forward to that announcement and then we'll talk in detail. But glad to know that global companies are recognizing, the potential in Indian chemical companies and the management and the talent, and hence are looking at those kind of associations, possible associations. Thanks so much for joining us on the show today.
Thank you.
With that, it's a wrap on the show. Thanks very much for watching. Goodbye.